Hello everyone. Welcome back to our series on why you need to move to the United Arab Emirates in 2024. This is part 3, and today we're diving into the financial aspects of living in the UAE, specifically focusing on understanding taxes and fees, when renting and buying properties, and how to apply for a mortgage, and last but not least, secrets for my viewers only. The things no one told me about the UAE mortgage. So make sure to watch till the end. So let's get started! Firstly, let's look at the various taxes and fees associated with renting and buying properties. Renting a property in Dubai? Here's what you need to know. Ijari registration fee. Registering your lease contract with Dubai's real estate regulatory agency, RERA, will cost you AED 220. Dubai Electricity and Water Authority, DAWA, fees. Once you've registered your Ijari, you can apply for a DIWA connection. The security deposit for an apartment is AED 2000, for example. Housing fee. This fee, equivalent to 5% of the annual rent, is added to your DIWA bill, agent commission. If you're renting a property via a real estate agent or a brokerage firm, be prepared to pay an extra agency fee. This typically ranges from 2% to 5% of the annual rent. Buying a property in Dubai? Here's what you need to consider. Dubai Land Department DLD. Fees. The DLD levies a fee for all property transactions, which is 4% of the total price of the property. Property registration fees. These are charged for registering the property under the new owner's name. For properties valued above AED 500,000, the registration fees are AED 4,000 x 5% fee. Mortgage registration fees. If you're getting a mortgage in Dubai to purchase the property, the fee is 0.25% of the mortgage amount, us AED 290. Legal and documentation costs. These vary but include expenses like AED 520 for the title of deed. Agency fees. If you're buying a property through a real estate agent, you'll need to pay their commission. The fees mentioned above are one-off fees at the time of purchasing. However, there will also be regular fees to consider, such as the service fee for your building or compound, which can vary greatly. To give you some idea, in 2023, Burj Khalifa Tower charged a service fee of AED 72 per square foot. So for example, if you have a one-bedroom apartment in Burj Khalifa, which is approximately 1,000 square feet, your annual service fee is AED 72,000 per year. But don't worry, this was one of the highest service fees in Dubai. It could be as low as AED 2 per square foot. Here are some more examples from 2023. Arabian Ranches charged AED 281 per square foot. City Walk charged up to AED 1263 per square foot. Rimal and Jumeirah Beach residents charged AED 1573 per square foot, and 5 in Palm Jumeirah charged AED 3072 per square foot. But don't forget, unlike many other countries, you won't have a municipality tax for living, which is a big plus. In conclusion, whether you're renting or buying, it's crucial to be aware of these costs so you can budget accordingly and make informed decisions. As always, it's recommended to conduct thorough research or consult with a real estate professional for the most accurate and up-to-date information. Next, let's look at how to secure a mortgage as a resident. Securing a mortgage in the UAE is a straightforward activity, as long as you can demonstrate your income. This income can be from various sources, including salary, commission, and rental income. You can apply for a mortgage in Dubai if you are a UAE national or resident, aged between 21 and 65, have a monthly income of AED 15,000 employed, and AED 25,000 self-employed. Do note that the minimum salary for a home loan in Dubai can vary based on the bank. To apply for a mortgage in Dubai, you'll need the following documents: a copy of your visa and passport, a copy of your Emirates ID, a salary certificate for proof of employment, proof of residence, copy of tenancy contract or DIWA bill, pay slips and bank statements for the past 6 months, the latest statements of your credit cards. Please note that you can apply for a mortgage after 6 months of residency in the UAE. So it is a good idea to come to the UAE and spend at least a few months to see which area you like before buying a house. Here's the step-by-step process of securing a mortgage to finance your home purchase. 1. Find a lender. In Dubai, home mortgages are sourced through banks and must be registered with the Dubai Land Department, DLD, to be legally valid. Each bank offers different interest rates and terms, so it is good to speak to multiple banks before making your decision. 2. Apply for the mortgage. Submit your application along with the required documents to the bank. The bank will then assess your financial situation, including your income, expenses, and credit history. 3. Approval. If your application is approved, the bank will issue a pre-approval or an agreement in principle. This document states that the bank is willing to lend you a certain amount of money based on the information you've provided. 4. Property valuation. The bank will arrange for a valuation of the property to ensure it is worth the purchase price. 5. Final approval. Once the property valuation is complete and the bank is satisfied with the results, you will receive a final approval for your mortgage. 6. Mortgage registration. The mortgage contract is then registered with the DLD and the property is transferred to your name. 7. Life insurance. In the UAE, life insurance is compulsory when you take a mortgage. The life insurance policy will pay out your home loan in case of your untimely death, allowing your family to enjoy the property without having to worry about mortgage payments. The cost of life insurance can vary based on factors such as your age, health, and the amount insured. Some banks charge the insurance premium monthly, separate to the loan, while others increase their interest rate to cover the monthly insurance premium. Life insurance typically ranges between 0.15% to 0.5% annually of the outstanding loan balance. This number can vary by the age and the bank insurance provider. Property insurance is often required in Dubai when taking out a mortgage. Property insurance is likely to be around 0.05% per annum of the property value. It's also worth noting that critical illness cover, CIC, which covers your mortgage payments for a period of time, in case you are diagnosed with a serious illness and are unable to work, is recommended by most life insurance advisors, but it is not mandatory in the UAE. Additionally, some banks in the UAE require that your salary be transferred directly to them and may offer a slightly preferential rate if you do. This is known as a salary transfer. Your employer will give an undertaking to the bank that if you were to leave employment for whatever reason, e.g., if you lost your job, moved to another job, or even moved outside of the UAE, any end-of-service gratuity would go to the bank where the salary transfer is being made. Finally, we are here. 3 things no one told me before. Firstly, in the UAE, the minimum down payment for a property varies depending on whether it's your first or second property and its price. For the first property valued up to AED 5 million, non-UAE nationals are required to make a down payment of at least 20% of the property value. If the property value exceeds AED 5 million, the down payment increases to 30%. For the second property or investment property, the down payment is 40%. So here's the lesson I learned a hard way. If you're buying a property priced above AED 5 million, you can pay the amount exceeding AED 5 million in cash directly to the seller and apply for a mortgage for AED 5 million. This way, you can still buy a house with a 20% down payment instead of 30%. However, this is only effective if the house price is below AED 5.7 million. Remember, this is only possible if the house price is higher than AED 5 million, but the valuation is lower. The seller's price can always be higher or lower than the valuation price. The second important aspect you need to consider is your age. The maximum term of a mortgage is set at 25 years, but the maximum age limit of a borrower at the date of the last repayment due on the loan is to be 65 years for non-UAE nationals. This means that if you are older than 40 years old, your maximum term will be automatically reduced and you will have a higher monthly repayment amount. However, very few banks in the UAE have removed the maximum age limit requirement on mortgage lending. As mentioned before, it is good to speak to more than one bank during your mortgage selection. Third, off-plan properties. When it comes to financing properties, some banks in the UAE only finance ready properties. For off-plan properties, the maximum loan amount is 50% of the property value. However, the Dubai Land Department, DLD, has implemented several stringent regulations to safeguard buyers of off-plan properties against delays, cancellations, and fraud. It's important to note that the location of the off-plan property may be restricted by some banks. I will talk more about off-plan properties in later episodes. The off-plan market in the UAE has changed drastically in the last few years, but this still remains as one of the most lucrative ways of making profit. In conclusion, while the process of securing a mortgage in the UAE involves several steps and requirements, it is relatively straightforward. Abu Dhabi and other Emirates have similar but slightly different process which will be discussed later. With the right preparation and guidance, residents can navigate the process smoothly and successfully purchase their dream home in the UAE. As always, it's recommended to consult with a mortgage broker or financial advisor for personalized advice based on your specific situation. That's it for today's video. We hope this information helps you make an informed decision about moving to the UAE. Stay tuned for our next video where we'll discuss more about new properties and market growth and more. Don't forget to like, share, and subscribe for more content like this. Thank you for watching.